Hello, everybody, and welcome to this webinar from the Investment Climate Reform Facility on financing variety for social impact and democratizing access to capital. It's brilliant to have you here. My name is Owen Dowsett, and I am a senior consultant within the Global Social Enterprise Programme at the British Council. Now, the British Council is one of the implementing partners for the Investment Climate Reform Facility, which this webinar comes under, and you'll be hearing a little bit more about that in due course. Now, I'm delighted to say that we had over 150 people register to attend this webinar. We have people register from Bahamas, from Fiji, from Madagascar, and from all over the place, really. So it's really fantastic to have you join us, and good morning, good afternoon, good evening, wherever you are. Just a little bit of housekeeping. This session is being recorded, so please be aware of that. I'm also very aware that this might be a new vehicle that you're dealing with new controls and a new panel to navigate. We're all very used to Zoom and Microsoft Teams, but this should be fairly self-explanatory and easy to use. There is an opportunity to ask questions, and hopefully within the panel controls that you have available, you will see the questions tab. So please do have a little explore as we go along, and please do note down any queries or comments or questions that you have as you go along, so that we can ensure that those are put to the panel further down the line. And there will be an opportunity later in the session for that to take place. There will also be relevant links put into the chat space as we go along, so please do also keep an eye on that, and there may be some useful things for you to follow up on. I'm first of all going to invite some welcome remarks, and first of all I would like to invite Escipión Oliveira Gómez to give some welcome remarks. I hope I've pronounced your name correctly. Escipión is the Assistant Secretary General of the Department of Structural Economic Transformation and Trade for the Organization of African, Pacific and Caribbean States, which is a partner with the EU in funding the Investment Climate Reform Facility. So Escipión, great to have you here, and please do give some welcome remarks.
Thank you very much for the presentation. First of all, I would like really to thank the ICR team for the invitation to participate in this very important webinar. We're very proud to be associated with the ICR facility and to work with our colleagues from the European Union in trying to forge a better future for our member states. For those that don't know, the OACPS is the Organization of African, Caribbean and Pacific States. We became an international organization last year, and we were previously known as the ACP Group. We were founded in 1975, and we grouped 79 countries from Africa, the Caribbean and the Pacific, myself having the privilege to come from the Pacific. Our group promotes sustainable development of our member states and the greater integration of our countries to the global economy, with the ultimate objective of reducing and eventually eradicating poverty. Youth and women empowerment are at the center of all of our actions, and we are led by our Secretary General, Mr. George Revelo Pinto Chicote, who is from Angola and who leads the works of the OACPS groups. For us, these are unprecedented times. COVID and other things, especially that digitalization, have really helped reduce time and space. So we need to have a paradigm shift and have our countries adopt new policies that address the challenges of our people in need, that target people marginalized and minorities. It is imperative that our policies promote the social, economic and cultural inclusion and active participation of all members of our society. This will not only help the personal development of the persons targeted, but it will also guarantee a more prosperous and peaceful and fair society in our countries. So With regards to social enterprises, we consider them really essential to coupling our country's social and economic development needs. So we have been working together with ICR in promoting this initiative. So with the partners of the British Council, Expertise France, GIZ, and CNV, and the government of Germany, they are implementing this facility, which seeks really to promote a better climate for our companies to prosper. Having said this, I really want to wish everybody participating in this seminar great proceedings. Please ask questions. What is important for you to know today is that ICR is there to help our countries with great partners, and the OACPS and the OACPS Secretariat is our entire disposal of our member states. Thank you very much for your time, and in Brussels at the OACPS at your entire disposal. I think that you will have our coordinates be at the team, and any questions you might have, any input that you would like us to have, we are at your disposal. So thank you very much, and thanks for the time that you have been allocated. I hope you understood my broken English.
It's better than my English, Escipión. I've been put to shame, in all honesty. Thank you so much. That's fantastic to have your perspective and to have those welcoming remarks. And we will be going on to talk a little bit more about the investment climate reform facility that Escipión mentioned in a moment. But now I would just like to also invite some welcome remarks from Miguel Campo-Llopis, who is Policy Officer, the Directorate General at INTPA, which I understand stands for International Partnerships, I think, though please do correct me if I'm wrong, Miguel, at the EU Commission. So Miguel, welcome.
Thank you very much, Owen. Can you hear me?
Yes, yep, loud and clear. Thank you.
Perfect. No, so no, you are right about INTPA. It is indeed our new name. We've changed a couple of weeks ago. We used to be called DEFCO, but now within the new commission, we've changed to INTPA to strengthen this concept of international partnership. On the part that you might not be so right is on the self-explanatory of the tool, because, or at least I might be a bit clumsy because I cannot pull my camera. So sorry for that, but I think it's my bad. In any case, so welcome everyone, and thank you so much. I think that, like always, when I have to speak after my dear friend Escipión, it's a challenge because he says most of the interesting things. But just I want to highlight also the fact that we all know that access to finance, it's always in every single survey, in every single document, one of the biggest constraints that enterprises and businesses face in our partner countries. It is a challenge. It's a very complex issue, and it goes at very different levels, from policy to the financial infrastructure, the markets, the perception of risk. But this is especially true for social enterprises and inclusive business, because they face a double challenge. They face part of the challenges that other companies face, but they face an additional challenge because of the nature of what they're doing. But at the same time, we feel that their job, their role in society, in the economic ecosystem, it's key. It's key to ensure sustainable and equitable development. It's key to ensure that all segments of the economy can access to basic services, and it's key to work in a context where vulnerability, like we've seen in COVID, is higher than ever. We see that inequality is rising. We see that there is challenges related to environment, related to gender. So we need these companies to thrive. We need them to be able to contribute to the challenges that we have in the partner countries. And therefore, for them to be able to do that, they need to be able to access financial resources. On this, today, I think is one of a number of webinars that we will have, or when we'll talk more about it. But I think the ICR facility is a key instrument that, together with the OACPS, the German Foreign Ministry, and the British Council, we are working with to ensure that our partner countries can actually benefit from the joint knowledge, not only from the agencies that are implemented, but also by sharing experiences from country to country, best practices, policies that have been in place that have been successful, etc. So we have today also iBAN, And that is an initiative that we are also supporting from the European Union. And it also reflects on the importance that we give to this segment of the economy when we want to promote this kind of development. So I would stop here. Like Escipión said, I think these webinars only make sense if people participate, if we can also get questions and allow a bit of exchange with our panelists. We always try to bring the best of the best so they can actually provide knowledge and experience and good practices. But it's also very important that you're active. And ICR goes beyond, as probably Owen will present now. There's a web page where you can navigate and see what other things that we're doing with the facility. And just wish you all the best and hope that we have another successful webinar with all. Thank you very much.
Perfect. Thank you so much, Miguel. That's fantastic, and that will have given the people here a little bit of a hint of some of the themes that you're going to be hearing about today. Now, it was a bit of remiss of me because I didn't highlight the agenda when I was supposed to, but you'll see now in terms of the slides a broad kind of overview of how we are going to structure this session. We've had some introductions, we've had some welcome remarks. I'm shortly going to talk a little bit about the ICR and then a bit of background about this particular webinar and what we're focusing on. We will then be hearing from our colleague Chiu with some emergent findings that are going to be used to influence a policy paper that she is writing and preparing about access to finance from the investor's perspective. And then we will put some questions to our panel members, of which there are 3 today, and that will be an opportunity also for audience members to put their questions to the panel as well. And we will finish off with highlighting how you can access the facility for one-to-one support. So without further ado, let me talk about the Investment Climate Reform Facility. This is a facility which is funded under the 11th European Development Fund and specifically under the partnership agreement between the EU and the Organization for African, Caribbean and Pacific States, with additional funding from BMZ, which is the German government, and the British Council. Now, there are 4 delivery or implementing partners that are working on delivering the facility, one of which is the British Council, another is GIZ, which is from Germany, another one is SNV, which is the kind of Dutch equivalent, and the final one is Expertise France. So these are 4 major institutions in Europe are working closely together to implement the facility. Now, the facility itself is primarily aimed at providing technical assistance to countries within Africa, the Caribbean and the Pacific, and providing technical assistance that is up to 90 days for each intervention, and with a specific focus on supporting reform in the business environment and in the investment climate, where possible with a kind of sustainable strand to it. And we mean sustainable in terms of social focus and environmental focus. And finally, through the vehicle of public-private dialogue processes that really bring the public sector and the private sector into communication, into collaboration to support business, environment and investment climate reform. So there are lots of opportunities, there are lots of challenges, and the Investment Climate Reform Facility is a way to channel technical assistance towards countries that would benefit from it. So certain organizations and institutions within countries that have an interest in this can make a request for technical assistance. These must be aimed at improving the business environment within the ACP country, as I've mentioned. They must also be part of a wider strategy. We can't have kind of standalone efforts and initiatives that aren't really part of a concerted collaborative effort at the highest level within a country. So it needs to be part of that. They must involve a component of public and private dialogue. And finally, there are certain organizations which are eligible to submit requests. Those don't include individual social enterprises or individuals. They have to be made by governmental organizations, business associations, development finance institutions, EU delegations, and certain organizations like that. And there's lots more information on the website, which you should see now in the chat function. There's a link there to the ICR facility online, and there's lots of information there about how requests for technical assistance can be made. We also have a LinkedIn page as well, which has just been highlighted there. So that's a little bit about the ICR facility. As a result of this webinar and in the aftermath of this webinar, which is really designed to stimulate requests for assistance, there is also the opportunity to benefit from virtual clinics, which provide one-to-one support for people and organizations that are interested around some of the topics that we talk about. So at the end of the session, I will also highlight how a request for one-to-one support can be made in the immediate aftermath of this webinar. So I think that's all I'll say about the ICR facility for the moment, and we'll move on to the real substance of this session today. And I just want to give a little bit of background about it. We are currently looking at access to finance for socially orientated businesses across African, Caribbean and Pacific countries. And as you may or may not be aware, a lot of the focus and a lot of the kind of key challenges for those sorts of businesses, which might include social enterprises, it might include inclusive businesses. There's lots of terms out there that are used to point to these sorts of businesses. One of the #1 key challenges for them is that they can't access the finance they need, or that finance tends to go to a very specific kind of cohort of these sorts of businesses that tick criteria relating to size and relating to their growth trajectory and relating to their legal formation and so on. And knowing that social enterprises and inclusive businesses can really contribute a massive amount to the social and economic development of countries, there is a bit of a need to ensure that a broader range of these sorts of businesses can access the finance they need to deliver the really valuable social impact that they do. Now, we had a previous webinar and there's been a policy paper which is just being finalized right now, which looked at this issue from the point of view of social enterprises and inclusive businesses, and highlighted from the business perspective what some of the key challenges, what some of the key sort of bottlenecks in relation to them accessing finance were. Now, this is the second part of that. It's kind of the other side of the coin, where we wanted to look at, well, where are there opportunities for innovation? Where are there challenges on the investment side of things? So now we're really moving towards well, the other side of the story, and what you know, where are there examples of best practice? What are some of the key bottlenecks for investors that want to achieve impact in what they're doing, and to kind of broaden their horizon in terms of the sorts of businesses that they invest in. So that's a bit of the background. I am now going to pass in a second to Bonnie Chiu, who is doing a lot of this work for us, who has delivered the first policy paper, and will now be looking at developing a second policy paper around these themes today. Just a little bit of background about Bonnie. Bonnie is the managing director of the Social Investment Consultancy, which is based in the UK, and she led the firm's international expansion into Asia, Africa, and the Middle East. She has a strong track record in social investment, impact measurement, and diversity and inclusion. Bonnie is a Forbes senior contributor writing on gender and diversity, and has been invited to speak in multiple countries and by corporates about social entrepreneurship and social impact. She has received multiple accolades for her work. She was named Asia 21 Young Leader by Asia Society. She's a Forbes 30 Under 30 social entrepreneur, and she won the Young Achiever of the Asian Women of Achievement Awards. She's now based in London in the United Kingdom. So without further ado, I'd like to introduce Bonnie, who I understand has been having some technical issues, so she might not be able to use her camera, but I know we can hear her voice, and looking forward to hearing some of your early findings, Bonnie.
Thank you so much, Owen. And yes, indeed, my camera does not work, but hopefully that means we can focus more on the slides with a lot of interesting content to share with you all. So as Owen mentioned, we are going to look more on the investors side of things. So looking at how impact investment currently is structured across ACP countries, and what are some of those innovations that investors are using and doing in order to achieve a greater range of financing options to socially oriented businesses. So we want to start by talking about what we are focused on. So the graphic you'll see on the right-hand side is the spectrum of capital. We have taken this from the British Venture Capital Association, but you will probably see similar graphics if you just search spectrum of impact capital. So what we're really looking at is impact-driven capital. So capital that is intending to generate financial as well as social and environmental returns. Back to what in the welcome remarks that have been addressed, it's really important for capital to now look at how we can contribute actively to solutions to address some of the most important social and environmental challenges across countries. So within the impact investment space, we see there are lots of gaps in across ACP countries. In particular, we've seen that based on the latest report by the African Venture Philanthropy Association, that the supply of social investment capital in sub-Saharan Africa remains significantly mismatched with demand from social enterprises and impact businesses. So with that in mind, we thought before delving into more detail around what investors are doing, we can refer back to what we were doing previously around the enterprises. So we very much see this as the two sides of the same coin. So understanding what investors do, we also need to understand how social enterprises, inclusive businesses and other socially oriented businesses are structured and are conducting their activities. So in our policy paper that is forthcoming, there are 5 dimensions that we've looked at that helps to understand the challenges that will confront impact investors to ensure that they are really addressing the wide-ranging needs of enterprises. We won't go into too much detail today, but you can see the 5 dimensions being legal forms and governance, income and mission alignment, size, age and growth, impact sought in their target communities, and leadership. And these 5 dimensions would help impact investors really understand what the nuances are. And we'll come back to these challenges as we go through some of the solutions that we are seeing among investors. But I just want to provide this framing upfront. So back to the supply side of the equation, looking at impact investment capital across ACP countries. This is a graph from the Global Impact Investing Network, their 2020 Annual Impact Investor Survey. So this survey is the most comprehensive snapshot of the supply of impact investment across the world. And we've just highlighted here the regions that we are talking about today. Of course, everyone segments geographies slightly differently, so we don't have a very comprehensive overview of the supply of impact investment, but we've highlighted here Oceania, Latin America, and the Caribbean, and Sub-Saharan Africa. You will see that, of course, compared to US and Canada, compared to Europe, that the proportion of impact investors are allocating a sizable amount of their assets under management. The proportion is slightly lower for ACP regions, with the exception of Sub-Saharan Africa. But within that, we have our research has shown certain challenges around access to finance for socially oriented businesses. For the Pacific is the need for models that provide smaller amounts of investments that really address the missing middle. In Jamaica, British Council research from 2019 has found that social enterprises find ongoing reliance on grant capital and obtaining other forms of finance to be their biggest challenges in access to finance. And in Sub-Saharan Africa, it's interesting to note that 90% of impact investment deployed currently come from foreign sources. So these are just some interesting characteristics for us to bear in mind, and I think the panel will tease out more of those dynamics in the discussion. So I also want to share just very quickly the positioning of impact investors in ACP countries. So I've listed on the right-hand side some of the example of impact investors across ACP countries. There are ones that are more philanthropically motivated, such as Acumen, Mercy Corp Ventures, that are very focused in investing in certain types of socially oriented businesses. So whether they are registered as social enterprises or cooperatives or non-profit organizations, etc. There are also a lot of emerging funds that are investing in certain leadership profiles. So we've just put in here a latest initiative by the African Development Bank's Affirmative Finance Action for Women in Africa, focused specifically on women entrepreneurs as part of the World Bank's Women Entrepreneurs Finance Initiative. But there are also investors that are looking specifically at the activities that businesses generate. So it matters less how they are structured, but more what they do. And so we have included here an example of an impact investor based in South Africa that's focused on early childhood development. And another one, which is an equity fund manager focused on certain sectors, including education. So that is just an overview. But then looking at all these investors and what they are doing, our key question that we want to address through the webinar today, as well as the policy paper and the technical assistance being provided by the ICR facility, is ultimately how can we create an environment where impact investors can better respond to the needs of socially oriented businesses. So we're just providing a few frames for easier discussion, exploring these three areas to bring forth some best practice, emerging best practices to answer this question. The first one is policy. So we're asking what investment-focused policy solutions are most effective to address the gaps in social finance impact investment provision, and how do they then respond to the varying nature of organizations. The second one that we're asking is process. So what are some of the process innovations that exist among providers of capital to ensure a greater and fairer distribution of impact investment among socially oriented businesses? And these two policy and process frames would very much directly impact product. So we're asking what kind of product innovations exist among providers of capital to help ensure that they are most appropriate to the needs of organizations. So whether it's in terms of the size, the term, the type or conditions attached to products. And we end with product because we feel the product dimension is most practically where finance is channeled to organizations, but they are influenced by policy and process. And we want to also share with you this OECD's call for action, which we think is a very helpful policy framework to help galvanize activities and efforts by impact investors to ensure that we are really channeling capital and funding to sustainable development. The OECD framework looks at 4 different action areas: policy, financing, innovation, and data, as you can see. And today we are really highlighting policy and innovation in the presentation I'll make and also in our panel discussion. And we think that these are really towards the financing outcome, specific one that perhaps is too small to read on the slide, but the financing outcome is ensuring financing is going to where it's most needed and that no one is left behind. So with that in mind, I will start first with policy. So we're looking at national, regional, and global policy. I'm sure our panelists will have lots to say around this, so I'll just make it really high level for now. In terms of national policy efforts, there have been innovations around the creation of social impact bond and blended finance. There is one recently developed in South Africa, the social impact bond for early childhood development. The outcome payers for this were the Department of Social Development of the government of South Africa. So what we find interesting is that this is actually the first one in Africa where a government department pays for the outcomes of this blended finance instrument. And there are lots of interesting activities to come, I think, around this. And on the regional level, we want to share a best practice from Asia. Recently, the guidelines for promotion of inclusive businesses have been adopted at the ASEAN level, ASEAN being the Association for Southeast Asian Nations. And two of them are specifically, two of the 12 policy instruments are specifically focused on investors. So we just want to share this example, and I know Markus will tell us more in the panel discussion around this area. The other thing that we want to mention is global policy efforts, such as the Global Steering Group is an international organization that is creating national advisory boards across the world. They are active in 33 countries, and in 3 African countries, Ghana, Zambia, and South Africa, they are already active. And we understand that there are developments underway for a national advisory board in Nigeria. It's essentially a cross-sector collaboration to deliver a national strategy for impact investment. Particularly an interesting policy instrument is the creation of social investment wholesaler funded by unused banking assets. Utilizing unused banking assets is where we might be able to create the market for social investments, very much like what the UK has done back in the early around 2012, 2013, and this is really the opportunity for channeling more catalytic capital into impact investment. So we'll talk more about how these are practically applied, I think, in the panel discussion. But moving on then to process, we're looking at how impact investments can, how we can allow for greater and fairer distribution of impact investment. So there are a few good examples that we also want to highlight. The first one is how can we matchmake socially oriented businesses with impact aligned investors. So this is an example in a program managed by SMV. SMV also a partner in ICR facility, as Owen mentioned earlier, the Innovations Against Poverty. So it, among other things, it does provide investment matchmaking support for inclusive businesses to connect with impact investors. And they're active in Ethiopia, Uganda, and Zambia. There's also a lot of things happening around how we can improve representation in decision making. One of the challenges, especially for enterprises that are led by women or those that are located in rural areas, that they have found access to finance particularly challenging, and their views often are not included in decision-making process. And there's a pioneering mechanism made by Village Capital, which is an impact investors. They have a peer-led selection process whereby entrepreneurs are part of the decision-making panels in assessing investments. I know Tara on our panel will have a lot to say about this as well, but on this slide we have included a few quotations from Village Capital's own report on this, that whereby improving representation actually allows for better understanding of risk, because entrepreneurs are much closer to what's being addressed on the ground, and that the entrepreneurs is also been proven that were significantly more likely to highly rank female entrepreneurs than were the experts. So I'm sure we have more interesting things to talk about here. The other process I just want to highlight is risk sharing mechanism. There's a risk sharing facility that's facilitated by the EU called NESIRA. So NESIRA provides finance to local banks that would lend to people they would usually consider too risky, such as migrants, women, young people. So that's also another example. Just moving then on to product, and you will see how policy and process do influence product, especially, you know, thinking about NESIRA. by allowing a risk-sharing facility, it will allow banks to take more risks and to be able to offer more flexible and patient capital to enterprises. There are 3 products that we want to highlight, and again, I'm sure our panelists will have more examples to share with us. Flexible and patient capital, such as by Energize Africa, providing companies that are expanding their pay-go solar schemes. One challenge they face is that they don't get paid until 24 to 36 months later. And also considering that the customers that these enterprises face often are from low-income populations, are in the last mile. So what Energize Africa does is that it provides bonds to these enterprises that mirrors the payback period. And also, they provide a flexible drawdown mechanism. So they agree a credit limit with the enterprises, and but then enterprises are free to draw down how much they want, or even perhaps they don't want to draw down in a particular month. So the flexible and patient capital has worked very well for the energy-focused companies that Energize Africa finances. The other one, also flexible capital, but how also culturally appropriate, can be supported through Sharia-compliant investments. Recently, British Council has conducted a study about social enterprises in Sudan, and there's also another report that's come out by the GSG. I've mentioned GSG before, the Global Steering Group, an example of the green bond and green sukuk in Indonesia. Sharia compliant investments, because of how those products are structured, seem to be having crossovers with products such as convertible debt and those models where interest payments are tied to revenue generation. Also, again, flexible and support enterprises, especially those that are early stage, that don't have a proven model yet around income generation that they can then access finance. The final one that we've heard from our colleagues in GIZ launching this program called the Nigeria Competitiveness Project has shared with us an example of inclusive insurance product by a company called Royal Exchange. They recently expanded their inclusive insurance products after an investment from an impact investor, Blue Orchard, and that allows smallholder farmers to be able to buy these insurance products to then apply for loans from commercial banks. And commercial banks, after understanding that they have taken out these insurance products, see them to be lower risks than before. So I've just run through lots of different examples. I think the biggest question for us is to ask, how can we scale these examples from different parts of the ecosystem, different parts of the region, to more coherent solutions taken up by policymakers and investors. So with that in mind, I'll pass it back to Owen to moderate our panel discussion. Owen, back to you.
Thank you very much, Bonnie. There's a lot of information there. Really, really interesting. I guess some immediate things that come to mind for me. There's an interesting dynamic between the kind of geographic scale within which impact investment is organised, and the collaboration potentially between local intermediaries and regional players and international investors. And it's interesting to think how that dynamic works and where there are opportunities within that relationship to ensure that suitable finance is made available to the kind of social enterprises and inclusive businesses that need it. I think another interesting dynamic is that sort of private and public collaboration, which is obviously a key focus of this investment climate reform facility as well. And like you sort of hinted at there, the kind of role of the government, of public organisations, helping to de-risk capital and ensure it can be channeled to where it's needed most. But anyway, really, really interesting. So yeah, I think we want to kind of take up some of those themes that you've talked about there, and invite maybe our panel to kind of comment on some things which they found interesting and draw on their own experience to talk a little bit about this. So maybe it's time to move to the panel now. So how this is going to work, I'm just going to introduce one at a time each of our 3 panel members and invite them to speak for about 5 minutes about their experience, about their kind of initial reflections, and what they sort of bring to the table, and whether there's any particular good practice in this area that they would like to talk about. And then once we've heard from each of them, I will ask some more specific questions. And we will also open the floor to receive questions from the audience. So please do, as we've said, take a note of anything that comes to mind and just drop it in the questions box that you should have on your panel. So first of all, I would just like to introduce Markus Dietrich, and I hope I pronounce your name right again, Markus. Markus is Director for Policy at the Inclusive Business Action Network, which is a kind of offshoot of GIZ. But yes, Markus, great to have you here, and please take 5 minutes to introduce yourself and any initial comments. We can't hear you at the moment, Markus.
Well, it told me that I am unmuted. I
can hear you now.
Okay, so there's a little gap. Well, thank you very much for the opportunity to participate in the panel. I'm working with the Inclusive Business Action Network as the Director for Policy. I've joined GIZ 3 years ago, and previously I've been working in the Philippines, mostly on inclusive business policy development. I'm also a social entrepreneur myself. I'm running Hill Tribe Organics. It's an organic chicken egg business in Thailand. iBAN, as you mentioned, it's implemented by GIZ, has been mentioned before. It's co-funded by the European Union and by the German government. And since 2014, iBAN is looking to scale up or support the scaling up of inclusive businesses, which we understand are companies that include the base of the pyramid, the low-income population in their core businesses. And what we have sort of experienced, and this resonates very much with me when you mention the two sides of the coin. We come very firmly from the demand side of capital, the inclusive business, but the more and more we are working, especially on the policy side, we feel that those two discussions must not be separate, but they have to come together. And I do feel still we have not found the right language for those two sides of the coin to speak together in a coherent fashion. Way too often we have the situation when the businesses complain that there is no money, and the investors complain that there is no pipeline. So I think a lot of work remains to be done, and I very much look forward to the support ICR can extend to overcome this apparent dichotomy. So what iBAN does, we've got like 3 main areas of work. We work very much in the area of policy. We have supported the ASEAN community in developing the already mentioned guidelines for the promotion of inclusive business. We work with partners in Zambia and Nigeria on impact investment readiness, so exactly at this nexus of the demand and supply of capital. And we also run inclusivebusiness.net, the largest global platform on inclusive business, and you're all invited to join us there. What we have observed over the last years is, on the one hand side, a growing need for finance, especially as we see now the effects of COVID. But on the other positive side, we've seen a growing range of innovative products in financing. This comes partly from the corporate side. We've seen a lot of like corporate social investor innovation. There's an excellent paper by EVPA out on this one. And also the Business for Inclusive Growth initiatives shows clearly that billions of dollars are moved by the corporate into the impact sphere. We've seen also the growth of blended finance. They've taken the next step of actually leveraging private money through public money, and Bamboo Capital's SDG 500 is an excellent example for this. In terms of process innovation that you mentioned, I think the matchmaking is becoming more and more professionalized. We are supporting Impact Capital Africa in Zambia, which have a curated process with a very high success rate of deals made in the end. On the policy side, we have come through a 3-year process with the ASEAN community on developing inclusive business policies. And I think later on, I'm happy to share some of the learnings on this one. While we have started our journey there from the demand side, over the time, we started to see the high demand also integrate the supply side of capital in our discussion with the policymakers. And this is reflected in some of the recommendations going forward. Like one sort of final thought maybe for the first round, I ideally love our friends from the impact investment community, but I've seen a lot of times that they're expensive. And I do see a great need or a great challenge to include commercial banks in these kinds of investment. I'm going to quickly share some experience from the renewable energy sector in the Philippines, which 15 years ago was at a similar stage, I think, as impact investment is right now, in a sense that the commercial banks did not really know what it is and did not accordingly invest. The IFC put up a guarantee fund combined with the technical assistance program, and over a very long period of time provided capacity for the commercial banks to understand the risk and the nature of renewable energy investment. And after quite a long time, but finally the banks started to understand these kind of investments and started to invest heavily. And you all know the success of renewable energy, notably solar, around the world. So I imagine for the future that also commercial banks will start impact investment and thereby reduce massively the cost and increase the access to such financing. So with that, back to Owen.
Thank you so much, Markus, and that's really really great to get started on that foot. I mean, I think what you mentioned there about hearing on the one side that there's no money and on the other side that there's no pipeline really kind of crystallizes the whole issue that we're trying to address in this series of knowledge papers, that there must be some miscommunication somewhere, or there must be a mismatch. And we're really trying to address that from both sides of that same coin that you mentioned. But I do think a key thing is, to some extent, the language, as you mentioned, and interesting reflection on the kind of corporate involvement in this as well, and the potential of commercial banks in entering this field. So maybe we can return to some of those themes shortly. But secondly, I would like to introduce our second panel member, who's Tara Sabre Collier. She is a gender lens investor, but I know that she wears lots of hats under that broad remit. So Tara, great to have you on board as well, and perhaps you can just introduce a little bit about yourself and some background, and with any initial reflections as well. That would be fantastic.
Good afternoon, everyone. Lovely to connect with you all today. I'm Tara Sabre. As Owen mentioned, I'm a gender lens investor. I'm the gender lead at the Shell Foundation, which is an impact investment and venture philanthropy fund which invests in renewable energy, sustainable mobility, and agribusiness value chains across Africa and India. In addition to that, I invest privately into gender lens companies. In addition to that, I also teach impact investing, specifically with an equality lens, so looking at both gender lens investing and investing for racial equity at Oxford University Said Business School as a visiting fellow with the Skoll Center. And I've been doing this for about 15 years in the international development arena and nearly 10 years within impact investing specifically. So I've seen a wide range of practices and tools that I'll just briefly give a glimpse of. I know that Bonnie and Owen, you both have given lots of specific examples of various tools that are around across the capital continuum, starting at the most early stage social enterprises, which often are really addressing the BOP often integrate a lot of knowledge of local culture and competency going all the way up to large-scale enterprises. The practices and tools needed change. So of course, when you start at the beginning with the earliest businesses, proof of concept, you know, the best instrument for that is often grant or repayable grant. But the entrepreneurs in emerging market contexts, especially those most familiar with those community challenges, often don't have access to grant and repayable grant. At the next stage of development, you have, you know, post-ideation, you have pre-seed and seed funding. And this is where ideally local accelerators and local angels would be able to come in. To some extent, international angels, including impact investors, are also coming in at this stage, but still insufficient given the demand for capital below ticket sizes of 500K. There's just not a lot there. There have been responses from the ecosystem. So one that stands out a lot is the Catalyst Fund, which is a collaboration between iBAN, I believe, and the French Development Agency, where they're doing match funding to local angels so that local angels will start to step up and take the risk, which is very important because the local angels don't have the currency risk of international investors, and they have a deeper understanding of local markets. There's also, as Bonnie mentioned, a lot of convenings intended to stimulate the local angel investment ecosystem. African Venture Philanthropy Network, I know, is at the forefront of some great ones going on. As you go to the next stage, you know, past the seed stage, and you're getting into seed stage or Series A, obviously we have a fair number of venture funds, specifically in Africa, which is the region that I am spending most of my time on. But not enough venture funds given the size of the population. We're talking about 1 billion people. So there's a critical mass of companies that would need to be created to enable the number of jobs for this young and growing population. So we still have gaps when it comes to venture funds, but we also have gaps when it comes to the types of funding. More and more venture funding has started to come in, but we are lacking other instruments. And this is important when you consider the fact that, for example, women are not really raising equity. They're not really raising venture rounds anywhere in the world, especially in Africa. I believe it's about 13% of seed stage funding goes to women-led companies, and there's some evidence that women want other tools. One of these that has been gaining a lot of traction in the West and which could be interesting in Africa, and I know genderless investors on the continent are starting to look at, is revenue-based finance. As you go to the next stage in the continuum where you're looking at you know, established businesses and SMEs that are scaling, what's really interesting is the use of results-based finance, and you need to hit a certain scale for results-based finance to even work. And this is where you can create some innovations that deepen the access for traditionally undercapitalized groups, which includes women, but includes lots of others, where you can also deepen the impact when it comes to ecological preservation. We've worked on various projects for this, including working with Cardano on bonds that integrate gender impact and climate impact. Our universal electrification facility, which is a results-based finance facility. Another example outside of SF is IIX out of Singapore. They're doing women's livelihood bonds, which are actually floated on the Singapore Stock Exchange. And this is an example of scaling impact capital, going into the broader private capital markets to go beyond, you know, these small tickets that I started off talking about to capital at scale. And this is, as Markus mentioned, part of the evolution of impact investment. Yes, banks coming in, but also getting more and more products on the capital markets. And this is why also credit guarantee schemes, which I believe have also been mentioned, are important to enable people to take risk, to enable all of this to start to be mainstream. So those are a few different practices which I think are important, and tools that are important at various stages of capital and growth that affect social enterprises in developing markets.
Fantastic. Thank you so much, Tara. That's really, really useful. I think just to few things which I really connected to there was this hint that you gave that there's really insufficient capital that's being channeled to the right sorts of companies to achieve the sustainable development goals, and we're always hearing about this massive shortfall in financing the sustainable development goals. And I think there's a lot of commentary about trying to better mobilize, for example, in Africa, local money towards kind of addressing some of the key sort of local challenges. So that's a key area where there obviously needs to be some innovation in product, in process, in policy. And I also, it is interesting that you should refer to women in Africa, I think you specifically said, as not really raising equity, and kind of highlighting some of those trends amongst social entrepreneurs and business leaders is obviously a key place to start in understanding, well, how can things change? How can we ensure that there's a broader range of people who are well placed to deliver social impact to kind of access the finance they need? So all really interesting. Thank you very much. And I'll return with a question shortly. But I would like to bring in our final panel member. So delighted to welcome Kevin Burrows. Kevin is founding partner and chief investment officer at Diomedea Capital Advisors. So Kevin, if you're able to take 5 minutes or so to just introduce yourself and maybe talk around some of the themes that you've heard about today and bring your experience to bear, that would be fantastic. Thank you for joining us. Great.
Yeah, thanks, Owen, and apologies for photobombing Tara there. Your follow-up question was longer than I thought. Yeah, welcome. Good morning, good afternoon, everyone. My background is probably, well, definitely comes less from sort of the policy and philanthropy side of my fellow panelists, and really has mirrored more of the growth of the traditional asset management investment framework, and the growth of the ESG and SDG space, which really when I started in this business in the early 90s, it just wasn't a thing. Nobody talked about ESG investing at that time. So you can see this evolution also take place in the way I run my business now. For the last 8 years or so, I've run a Bahamas-based investment advisory and consulting business. And if you look at sort of the three parts of what I do there, first is really performing as an outsourced CIO, outsourced chief investment officer, performing traditional global asset allocation and the likes for family offices and institutions, small, medium-sized institutions here. The second area of my background and of what I do is really in terms of corporate finance and as a direct investor as part of a development investment group. And currently we're involved in numerous projects off our balance sheet, one being the development of a student residence tower in partnership with the University of the Bahamas, fairly large project there. We also directly have a energy and microgrid business in the Bahamas as well. If you're familiar with the Bahamas, we are an archipelago of over 700 islands. Clearly, the economies of scale in electricity distribution is an issue, and we find the new growth of sustainable energy through microgrids is something that our country in particular is definitely looking at, and the entire Caribbean as well. Finally, I am very heavily involved in a fund advisory that's actively involved in trying to make the case for SDG investments in the Caribbean. So I recently produced a research report in partnership with a group called 17 Asset Management out of New York. And in that research document, really we're making the case that beyond the common perception of the Caribbean just as simply a tourism destination, that the region really presents a wealth of opportunities that both local investors as well as international investors can achieve, we feel above market rate returns compared to particularly the developed markets, which are heavily picked over in terms of venture capital and private equity. As we know, and we've heard before, the Caribbean region is pretty much starved, like most small SMEs. We're starved for capital. So anything we can do to bridge the gap of, like we say, they're providers of capital who say there's no pipeline, and then on the flip side, you have entrepreneurs who just can't get funded. So recently, we are very much involved in trying to solve for that problem, that there is capital that would like to get involved, but again, they don't really know how to do so. So not to get very deep and talk more in other questions, I'm currently involved in a regulated marketplace sort of crowdfunding security exchange in the Bahamas called OACPS. And it's really through that vehicle that I'm trying to bridge the gap between providers of capital and those SMEs that need capital sort of between 50,000 to up to $1 million. And that's a very difficult space to crack. Sure, I can raise a fund with $50-100 million, but if I'm spending $50,000 tickets, then you're talking 500 funds and 500 companies, and it's generally beyond the scope of the effort that most private equity or venture capital funds will do. So what we're trying to create there is really a platform that's an alternate form of a capital market. So it's a technology-based platform, has a cloud-based crowdfunding interface. You can have mobile matching and trading, and on the back end, we're using standardized forms and smart contracts that, again, reduces the time to market for the entrepreneur and also cuts down on the cost of legal to create a prospectus and the like. So, I really believe that a platform like that, a matching platform, is really the missing link. It needs to be a first step before we can then begin to build the traditional venture capital, private equity industry that, like Tara said, we can then invest in second and third rounds that's coming out of these platforms, also coming out of the various accelerator programs, of which Bahamas spends $50 million a year through its Access Accelerator into the small and medium business space. So I'll leave that as an introduction. Certainly there'll be follow-up questions and questions from the audience.
That's fantastic. Thank you, Kevin. It would be super if you were able to put a link maybe to that crowdfunding security exchange, if it's at that stage within the chat, so people can take a look at that if they're interested.
Sure.
Sounds really interesting. It does also highlight, I don't know if it's specifically for SMEs or whether it's for socially oriented businesses, but it's interesting. This is kind of a dynamic we've been playing with a little bit in the policy paper and in preparation of this webinar, where there are kind of common issues regarding access to finance between a socially oriented business and an SME more broadly, and where there are particular differences in the kind of issues they face, and really trying to draw those out to understand whether there needs to be tailored interventions and where those need to be. But anyway, all very interesting. Thank you. Now we have had some questions come in. Sorry, Kevin, did you?
No, that's fine.
Okay, great. And I'm also just, we had a couple of questions in advance as well. Now I know one question has been around the GSG and how countries such as Sierra Leone can move towards collaborating with the GSG and maybe implementing the National Advisory Board, which is how the GSG takes shape in specific countries. Maybe you can incorporate that into your answer to this, Markus. I think given your in-depth policy experience, especially around the inclusive business area, very interested to know, and we've heard a little bit about it today, but not really properly focused in on it, what value there is in the public and private sectors working together, and to what extent that's really needed to improve financing options for social impact. And I know we had a conversation about this previously, and it was really interesting to hear some of the things you said, and maybe you have some insights about how the public and private sectors can best work together to improve financing offers for socially oriented businesses such as inclusive businesses.
Yeah, certainly. Well, thank you. Regarding GSG, I think it's easiest just to send an email to Cliff Pryor, the CSO, CEO of GSG. He's in London, and I'm sure he would be happy to engage with you in Sierra Leone. We are aware of like the NAP in Zambia. There's like efforts in Nigeria now to start a NAP. So there's definitely a momentum to expand the scope of the geographic scope of the NAPs that I'm aware of. Regarding our sort of experience, the guidelines that you have mentioned actually informed through a 3-year process within ASEAN that had actually started earlier in 2012 with the like Philippine government starting to get interested in inclusive business. And why did they get started interested? And I think this is sort of interesting in this discussion as well. Inclusive business and also impact investment is a very thankful topic. And who would say no to the opportunity to improve the livelihood of the poor and low income population? It's very much in line with inclusive growth agendas of governments. Is very much in line with the private sector objective of economic growth, but also in the wider sense now on non-financial or impact parameters. So it's a topic people like to engage on, the private sector and the public sector. When we did our public-private sector dialogues, we found them to engaging in a very constructive dialogue. And I had seen in other topics such as taxation, those discussions are not very constructive because definitely you don't have the same objective. However, with inclusive business and impact investment, there's a very common objective of the public and private sector. So this is already good, a very good starting point that we found. And out of those discussions, and this is what we did, the policy recommendations emerged. So it was not like a top-down paper, but something that was informed through many discussions with hundreds of CEOs, and also the ecosystem, the impact investors came in. And honestly, we did start with the like a pure like demand side point of view, but the more and more we engage with the ecosystem, the more we included also impact investors and other stakeholders. So I think this is sort of the way it has to shape. And it's good to see there was recently a paper by McKinsey for Catalyst 2030, which stressed the importance of policy for social entrepreneurs. And having been in this field for a long time we felt very lonely because policy is not a very, to say so, attractive place to be in because it's very long term. You've got no like safety that it will lead positive results. And so I'm not very glad that more and more people recognize the importance of policy, the need to engage with policymakers. And what I've seen from the policy sector, we do find very open ears for those topics.
Perfect, thank you. Sorry, just taking off mute. And I think something that you previously highlighted was really the de-risking role of the public sector, and really that kind of can come in the form of very specific products in terms of some of the social impact bonds and development bonds that Bonnie spoke about, but also in terms of providing assurances around the broader ecosystem within which social enterprises and inclusive businesses are working. I guess one thing to highlight here is that there is a slight difference, although there's some overlap in inclusive businesses and social enterprises, isn't there? And I think inclusive businesses are generally expected to be operating at a greater scale and to be more commercially viable maybe than social enterprises. And we found in some of our research that social enterprises in lots of situations continue to be dependent on a funding mix where there might be a bit of grant, there might be a bit of investment, and so on. So I guess that would also point to the need for de-risking capital to kind of help a broader array of products to be made available to those businesses on the ground.
Certainly, and then but I think we have to really think hard about this terminal of de-risking, and it's not only the financial risk de-risking, but looking at this sort of whole business in a much broader sense. And interestingly enough, when we talked to the companies, many of them were not asking for tax incentives, which you would sort of usually assume that they would be asking for, but actually kind of like an ombudsman, somebody who could in the agency or in the government could take care of their concerns if they run against stumbling blocks. For them or for the companies, this was sort of one of the biggest de-risking factors. Somebody who could navigate the often sort of not often complex political or other infrastructure issues that you have if you go the last mile and reach the BOP.
Great, thank you. Now I wonder if I can just return to Tara and maybe Kevin along the same lines as well. Moving on to process and product innovations, Markus has talked quite a lot about the policy, which is really interesting and really obviously very important to getting capital out there and channeling it in the right direction. But are you familiar with this idea of there being process innovations and product innovations, and that both are kind of needed to support a greater distribution of finance? And I guess, are there any sort of particular areas where you think in terms of process there needs to be a change with impact investors to ensure that kind of greater distribution? I mean, Tara, you've talked a little bit about the gender side of things, which it would be interesting to hear more about maybe. And I mean, if you'd like to go into any more detail about any of the specific examples which you mentioned, that would be really great. Maybe I can direct that to Tara first. I know you are on a limited time availability.
Yes, so there's a few aspects within process. Are we getting into process, or are we getting more into product?
Well, I mean, my opinion is that I think the two kind of morph into each other, really. My understanding, I think I would say process is anything that's behind that final product in terms of arrangements that are made that kind of set the scene for that final product, final financial package being made available to enterprises and businesses.
I mean, because impact investment is still relatively new, all of this is becoming increasingly more streamlined. Just like when it first came out, there was no general standard, and you know, then eventually B Corp, B Lab, Gears, all of these different standards came out to try and codify and standardize what is an impact investment. We're now looking at that when it comes to defining what is the investment, but also specific aspects of process to ensure that the impact is there, and now increasingly to ensure the inclusiveness of the impact. So I think some interesting things, and this is firstly on the process side, from the perspective of getting capital to people who aren't typically getting it. We're just starting to understand these demographic gaps. Obviously, we know when it comes to capital, like startups in the West are capitalized at a quantum of multifold greater than startups in Africa. But even within Africa, most of the capital, especially early stage capital, is going to only about 6 countries. And then even within those countries, there's disparities along gender lines. And increasingly, we're starting to see that there's disparities among, at least in East Africa, expat founders and African founders in getting access to capital. Where does it, why am I linking this to process? Because if we're saying that impact investment is about the SDGs and SDG 10 is about reducing inequalities, then it goes against our impact to worsen inequalities. Which is why process is important, to find ways to do this in a way that is truly, of course, inclusive and not worsening inequality, but can enable us to take advantage of better local market understanding or consumer understanding in the case of serving women customers. Processes that are important or emerging in regards to this. Obviously, the IFC and CDC came out recently with their gender lens investing guidebook. And this gets into, all kinds of processes that you can integrate at a fund level, starting with the very, beginning of, your deal evaluation process and going all the way across the investment process to technical assistance that can help tailor your guidance to your portfolio companies in ways that can enable them to have greater women's representation in the company at the senior level, but also better serve women customers. Another example of this is the broader topic of diversity, and these standards are also starting to come out. So the diversity standard came out in the past year, and this is for investment funds to basically have criteria for how they do their due diligence, how they select fund managers, how they select investees to ensure that unconscious bias, racial, gender bias, mores don't actually cause impact investments to be less impactful because they're not done in an equitable and inclusive way. And a new DD standard, I believe it's called DD 2.0, which is created by Adesina Social Capital out of the US in Oakland, is basically a new set of due diligence guidelines that intends to re-engineer to reduce the impact of unconscious bias. So I think these are a few different process changes that are starting to happen, but I must just, overarchingly state that because impact investment is still pretty new, even when we look at gender lens investing, which is way more established and streamlined than racial equity investing, we're still coming up with the processes that are allowing us and supporting us to do this in a more inclusive way. I know that I briefly mentioned some of the different financial products that could allow us to be more inclusive in our coverage as well. So these range from, everything from the gender finance bonds, which are like the women's livelihoods bonds by IX, to the emerging use of revenues-based finance among gender lens investors. And all of these, of course, are just being tailored for the local context. So even if you're not a really big financial institution like IIX, some of our portfolio companies, in trying to better serve women and trying to better serve women smallholder farmers at the base of the pyramid, are creating new partnerships and creating new products or tweaking their products to make them more available to women. And this includes everything from changing marketing practices to go out to villages, to use MFIs to market to women, to changing the actual loan terms so that they're considering the fact that women are far less likely to have access to collateral. Just a few examples and things to think about.
Just a few examples, that's fantastic. Tara, if you're able to put any of those links while you're still with us within the chat, I think people would really find them useful, because it's really good to be able to delve into some of these examples. I mean, I think that you kind of mentioned it there. There's gender lens investing has sort of been paving the way for a lot of other equality work, I think, within the investment field. And I think one of the things that's come back, right, is that maybe, for what purpose, which sounds a ridiculous question, but right, if there kind of needs to be consideration of other factors and I guess the intersection of a lot of these issues, right? So just supporting the 1%, say, to ensure that that's a more diverse 1%, while the 99% kind of get further and further left behind, isn't the only kind of, it doesn't sort of address everything. So there's a whole thing about kind of ensuring that socioeconomic disadvantage and discrimination is overcome through process innovations and product innovations within impact investing as well. Really interesting. Really interesting that you mentioned the diversity standard for investment funds. If you've got a link to that, that would be great as well.
Sure.
Okay, yes, fantastic, thank you. Now let me just ask Kevin, is there anything in terms of that side of things that you can bring in terms of experience or knowledge of what's going on in the Caribbean? It would be really interesting to know what's happening there a little bit as well.
Yeah, sure. You know, despite the problems that the Caribbean has, particularly in terms of climate change and sea level rising and hurricanes intensification and the like, you know, the need for gender lens investing is probably less here than it is probably less an issue than we find in other countries in the world. Caribbean has a, you know, a fairly female-dominated workforce and economy, and we have a very high percentage of female-led businesses and female entrepreneurs. So we tend to score fairly highly in terms of gender inequality, you know, particularly in the Caribbean. I'm not sure how it is in Latin America, which I think is a bit more macho society. But, you know, luckily, kind of touch wood, it's not a focus for us. What's more important, I think, for just our SME community is just, again, the lack of financing options to grow your business. There's been a recent IDB report that, you know, says in the Bahamas alone, which is a country of 400,000 people, we have a funding gap of about 200 million a year between, you know, viable business ideas and the lack of financing to actually, you know, to push those forward. So there's clearly an inefficiency in the existing entrepreneurial ecosystem, both in the Bahamas and in the Caribbean generally. We find that, you know, that banks are just, you know, useless when it comes to lending to the sector. About 85% of MSME loans are rejected by commercial banks here in this region. You cannot really borrow against a business plan or even against projected revenues. If you don't have collateral, then, you know, you pretty much are blocked from bank financing. And finally, the flip side is also there is lack of trust by investors to put their money to work in the SME sector. And a lot of times it's because the businesses aren't really properly structured, you know, in terms of accounting systems, in terms of governance, in terms of having a board. So again, one of the areas that, you know, that OACPS and platforms are trying to do is create that standardization. So one of their services is, you know, we will include evaluation. We will help you create a pitch book, prepare the legal documentation, offer a memorandum, you know, help you formulate a dividend policy and a distribution policy to your equity holders. And that really builds more trust by the providers of capital to actually lend you the money as well. So attempt to level the playing field to, you know, with that from that respect. Generally in the Caribbean, you know, they say it's less of what you know than who you know, and really we're trying to counteract that by, again, making sure everyone is coming at it from, you know, from the level playing field. And I just kind of highlight just what, you know, just how hard the problem is. Last week, the chairman of the Bahamas Entrepreneurial Venture Fund, which is kind of a government-funded initiative that will ultimately, I think, get joined in with the Small Business Development Center and our accelerator program. But he gave an update on, you know, on this government-funded portfolio. And since COVID, there are only 15% of that portfolio are still current on their loans and on servicing their preference shares. 23% have requested deferrals, and he said 62% of the entrepreneurs in that portfolio have just gone dark. They haven't heard from them. They're not, they haven't gotten, haven't gotten paid. And that's what we're trying to avoid by having them come through a standardized platform, which is regulated by the Securities Commission. Just, we're at such an early stage in venture capital and private equity that it's hard for to go directly into that type of product in these nascent markets.
It's interesting. It's obviously something that we haven't talked too much about today, the impact of COVID-19, but it's obviously a very a massive challenge at the moment for businesses and social enterprises that tend to be fairly small, fairly vulnerable to disruption. And it's interesting to see some of the responses, whether through coalition or through a relaxing of policy or whatever, amongst impact investors to really try and support social enterprises, or not, as the case may be in lots of situations. But it's encouraging to see that a lot of the time within this situation, impact investors really are seeing themselves as partners with the businesses that they invest in, rather than replicating a more traditional kind of power dynamic, I guess. So really interesting to reflect on that a little bit. I'm aware that a couple of questions have come in, and I don't know whether any of our panel members, they might excuse me, they might be well placed to respond to this, but we might have to make sure that we address it in our policy paper or send you further information afterwards. But one question is, how can NACIRA extend its operations to COVID-19 affected SMEs in Sierra Leone? What are the procedures for an organisation or country to engage NACIRA? Regarding local banks lending to too risky groups like women, etc., how does NACIRA overcome the challenge of high interest rates? So I think we, unless anybody is particularly well placed, maybe Markus, you might know a bit about NACIRA, I'm not sure, but we can look into that more for you, and I would suggest visiting its website. From my understanding, NACIRA provides guarantees on loan products to local banks within certain countries. I know it's done some stuff in Kenya. And I don't know to what extent it's looking to replicate and be drawn out, but I'm sure there's other versions of similar. It's a kind of common way that institutions within Europe, within North America, support efforts within Africa and other regions, which is to work through local banks, providing guaranteed funding, and as part of that arrangement to really encourage and in some cases require those local banks to ensure those loans go to certain groups. I would suggest taking a look at their website, but it's also an example which we hope to explore a little bit more in the policy paper that will follow in the next couple of weeks following this webinar. And I see a link has been put to NACIRA there. Also a question from Edwin at Social Enterprise Ghana. What are the fine examples of countries with working social enterprise and impact investment policies that we can learn from? So I think that's a $1 million question in many ways. I know within Ghana that you've been doing a lot of work, Edwin, developing social enterprise policy, and that it's waiting approval as far as I understand. Certainly in Ethiopia, they're doing a lot of work to embed social entrepreneurship and impact investment considerations within the national entrepreneurship strategy. I would say a lot of the time it's not necessarily about inventing a whole new policy or a whole new strategy. It's looking for opportunities to piggyback onto where these things already exist and to ensure that there is consideration within those strategies for the kind of specific challenges that social enterprises and inclusive businesses face. Markus, I don't know if you want to come in here, if there's particular examples where you think inclusive business or social enterprise has been particularly well incorporated into national policy, and especially in terms of investment and finance.
Yeah, I can certainly do that. I want to sort of stress stress that the point that you made before, that it is always useful to look at existing policies and see whether they can find a window for social entrepreneurship there. And inclusive business, we've worked a lot with boards of investment, which have existing investment promotion strategies, and added inclusive business there. In the ASEAN region, there are a couple of specific social enterprise policy instruments. Recently, Thailand launched a Social Enterprise Act, which also gives like tax benefits and other support mechanisms. Malaysia has MAGIC. It's an agency that supports inclusive business, social enterprises. Singapore has RAISE. Again, it's got a holistic program ranging from technical assistance to funding. One often cited examples for policy is preferential procurement in South Korea, which I think encompasses now more than 1,000 social enterprises that have been accredited to participate in this scheme. So definitely, I would suggest to have a look into other regions of the world, such as Southeast Asia, which has quite a lot of like policies in place already regarding inclusive business. There's one in place in the Philippines, which now provides additional tax incentives for companies which already register under the Investment Promotion Act. They get additional 2 years of tax holiday if they do their project in an inclusive business model.
That's great, thank you, Markus. And I know GSG have recently published a policy paper around impact investing within Southeast Asia or East Asia, which would definitely be worth a look at, Edwin. I think there's a lot of learning that can be taken from and that policy paper does include lots of examples from different countries. And obviously, I think a key thing about this, which we haven't really managed to focus in on today, is trying to find that balance between the local embeddedness of you know, social enterprise, of impact investment, of the kind of social challenges that need to be addressed, of the sort of cultural landscape and context, and the influence that that plays, and how and to what extent there can be kind of international practices or international standards that can be applied or tailored within certain communities and certain countries, because I do think there's a degree of that tailoring that needs to take place for anything to be effective. And Edwin, I'm sure you're going to be the first to acknowledge that. And I would also highlight, in response to both Edwin's question about good examples, and also in relation to the question about Nasira, that this is a primary function of this ICR facility, which is to provide technical assistance. So I think if you have specific questions like that, and you have the support of governmental institutions and organizations that are willing to put in a request on your behalf, then it's a perfect opportunity to really kind of work out what the key challenge that you need to address is in this space, and to translate that into a request. So this is an opportunity to really kind of receive some tailored support on those very questions. Now, I think we're probably going to have to wrap up. We're nearing the end. I'd like to say a massive thank you to our three panelists, to Markus, to Tara, and to Kevin. It's great to have the range of experience and insights and expertise that you brought on board, as well as the kind of geographical variety of your experience, and really interesting to see, yeah, kind of some of the nuances between different areas and sectors and business types. Also, a massive thank you to Bonnie, and for presenting those slides on where she's got to on this. This session, as well as the work she's done previously, is very much going to inform the policy paper that is going to look in more depth at some of these issues. So please do keep an eye out for that. We're happy to receive good examples, or to receive interesting challenges and opportunities in the impact investing space and innovations that you might be aware of that we haven't mentioned. So please do get in touch with anything like that. I would just like to highlight, as you'll see on the slide, the next couple of webinars which are going to take place under the ICR facility. So firstly, there is one on the 11th of February from 2 p.m. to 3:30 p.m. That's in CET time. And the language, that one will be delivered in French with a simultaneous interpretation into English. And it has a specific focus on opportunities and challenges for crowdfunding in ACP countries. Now, crowdfunding is obviously an example that we could have talked a little bit about today, and it is one potential solution to some of the issues that we talked today, especially if it provides a kind of more direct link, obviously, between investors and the kind of impact that they would like to have. Now, the second webinar, which is upcoming, it's very closely linked to this one, still about democratizing access to social finance. It's going to have a particular focus on green enterprises, with some social enterprises as well, to kind of take green enterprises as an example of some of the challenges and innovations in impact investing. And with a specific geographical focus on the Pacific and the Caribbean, we're very aware that the kind of time that we put these on benefits certain regions of the globe rather than others. So that's going to be a real effort to try and engage a little bit more communities from the Pacific and the Caribbean. And the date and time of that, that's 9 p.m. to 10 p.m. Central European time. And that will be delivered in English. So there are opportunities to sign up for those events that are currently in the chat. Now, I think the final thing that I wanted to talk about, well, firstly, I have to say that the recording will be shared after this event, the recording of today's session, and it will also be put on the website. And you can also find previous recordings of previous webinars on the website as well, along with a whole range of information that broadly talks to some of these topics about investment climate and business environment reform. And as I mentioned earlier, as well as the kind of longer term, deeper sort of technical assistance that can be offered to countries on the basis of a request being made, there's a kind of intermediate option on the back of this webinar, which is to take part in a one-on-one clinic. We have a limited number of these that can be provided by some of the experts that you've heard from today. These are targeted support sessions, which will last between 1 and 2 hours, and they can respond to particular questions that you might have in relation to some of the topics today. They are available to public or private organizations that are based in African, Caribbean or Pacific countries. Slots will be granted based on availability, and we will try and ensure that there's a regional balance across the ACP regions. You have until the 11th of February to register your interest, and please do that by emailing info@icr-facility.eu. And please, within that email, indicate your organization and what your particular interest area is, and the kind of questions that you would like support on. And I think all of those links have been put into the chat. I wanted to give people a sense of the sort of technical assistance that can be offered. A lot of the stuff is helping at a kind of ecosystem level, supporting with policy development as it relates to investment climate reform. It might involve supporting network bodies and building capacity amongst those that kind of represent the interests of businesses. There might also be ways that we can support more tailored strategic developments in a particular area. For example, if that relates to inclusive business and creating the environment, a supportive environment for inclusive business or for social enterprise, or as we've been talking about today, really supporting the investment infrastructure and innovative policy models or process models or product models that are tailored to your country. There's a whole range of things, and inevitably it's going to reflect what the kind of main issue is that you're grappling with. But please do just get in touch, and we can let you know whether it's something appropriate to be delivered through this. So